Hello, this is Andrew Westhof, Senior Loan Officer and owner of Homes Mortgage Lending. And I want to talk to you a little bit today about how to compare different offers from different mortgage companies, because I know that you want to make sure that you're getting the best deal for you and your family. So I'm licensed in the state of Michigan. Most of this information is going to pertain to you, whether you're buying a home in Michigan or anywhere in the United States. But just know if there's some specific things you see on some of the things I show you to Michigan, that is why, because I operate only in Michigan. So some of the costs and fees and things like that in other states do differ a little bit. So first, I work mostly with buyers, and one of the biggest things I see is a mistake is that my buyers will come to me and want to know my best rate quote, what my best pricing terms are when they're at the stage to get pre-approved, or even before they get pre-approved. They'll be wanting to find out which lender they want to go with based on their pricing before they get the pre-approval letter. So this isn't the time to shop for your interest rate. And you do want to know some terms of your loan. You want to know based on your qualifications, what your monthly payment will be roughly, and what your out-of-pocket will be. So I always do run numbers like that for my clients when we're pre-approving them. But it's not the time to pin down what lender you're going to use for a few reasons. The biggest reason is that no lender can lock your interest rate when you're getting pre-approved, or at least some do like a lock and shop. Usually that's a higher interest rate. But for the most part, you're not locking an interest rate. So interest rates change every single day. Every single lender changes their, adjust their margins a little bit from time to time. So you don't know who's going to be the best price on the day that you lock. I equate it to gas prices. So like I always tell clients, I'm usually a very low price lender. Like I'm the gas station when you drive by, you go, yeah, that's where I usually stop because I have the, I usually have the best price. Now I'm not, 25 cents, 50 cents lower than anybody else a gallon, but I might be 5 cents lower a gallon. So it's worth it to you to go to meet it versus going elsewhere. But the gas station across the street is going to, want to compete with me. And every once in a while, they're going to lower their prices and, beat me by a penny or 2 pennies. So you have to check it when you get an offer accepted. That's when you can actually get your loan in process, and typically when you can lock your interest rate. And then some unscrupulous lenders sometimes will put together some fake pricing with the strategy that they want to get you to work with them up front and hope that you don't shop them later. So what they'll do is they'll put basically fake numbers together. We can put whatever numbers we want. I can show you any interest rate, any terms. I can underestimate fees. If I want to get shady, which I'm not, I work with clients. I like my clients. I want them to get honest, accurate quotes, and I want them to refer their friends and family to me. So I give as accurate numbers as possible. If anything, I'm conservative and show them higher numbers than what they'll actually be. But some lenders do the exact opposite, knowing that you're not going to lock the interest rate in today anyway. So they try to get you to do the pre-approval with them, get all their documents uploaded. Hopefully you don't work with anybody else in the meantime. So when your offer gets accepted, it can be a stressful time. You've got a lot going on and you need to get your loan in process right away so that you can hit your closing date. Their goal is that you don't shop at that point. And if interest rates come down, they look like they were honest up front because they go, yeah, that's what we talked about. If they stay the same or go up, now their rates are higher than what they showed you. But at that point, they just tell you, yeah, rates went up. So it is what it is. Let's get your loan in process so we can hit your close date. So you want to avoid that. If you talk to enough lenders, you will find ones that are dishonest. And some lenders will even misquote you, not even on purpose, just a lack of experience, or more common I see is laziness. They're not working to put accurate numbers together, unfortunately. There's also at this point, pretty much every lender has their own fee worksheet or cost breakdown that they're going to send you, their own format. So it's not easy to see whose lender's pricing is where. You see 3 different, you're talking to 3 different lenders, you see 3 different price quotes, and it's hard to, to see who's putting what cost where. Some of this is on purpose from a sales standpoint. A lot of it is just ease of use. The loan estimate is required to be sent to you when you're getting a loan in process or giving us the information to be able to put a loan in process. So once you have an offer accepted, we can provide a loan estimate. And it's uniform, so you can compare it, but it's a government generated document that isn't always the easiest to read. That's certainly why I don't provide loan estimates when the client is searching. I want to put the information in a much more digestible manner and then get them the loan estimate once the loan's in process. Here's the good news though. You can get pre-approved with multiple lenders. So if you know, here's these 3 lenders, my realtor recommended one, a family member recommended one, I know one, whatever the case might be. I know that these are the folks that I want to shop around with. You can get pre-approved with all of them at the pre-approval stage, and it doesn't even hurt you. So when you get your credit pulled by the first lender, you have to get your credit pulled to get pre-approved. If the lender's not pulling your credit at pre-approval, then it's not a real pre-approval, and you probably shouldn't work with that lender. But when you get your credit pulled by a mortgage lender, it hits your credit score between 3 and 5 points for the inquiry. If another mortgage lender pulls your credit within 30 days of the first mortgage lender pulling it, it doesn't affect your score for a credit inquiry. Now, just so you know, if you're 15 days out, some credit card balances might have changed, some things might have reported payments, things like that. So your score could have fluctuated a little bit. So if you're doing it the same exact day, the credit score should be the same from lender to lender. If it's a few weeks after the fact, you'll see the difference in score just from normal score change stuff. So don't come back to me saying, Andrew, you lied about that. That my credit changed after this other lender pulled it. It wasn't the lender pulling it, it was something else. So go ahead and do that. The added benefit of this is if you're pre-approved with multiple lenders, you're going to see who you like working with. They're going to be helping you with fee worksheets and running numbers for different properties you're looking at. You'll get a little feel for how they operate. And if you don't like working with somebody, you can kind of toss them out of the lineup of folks that you may consider using. And if you do have a preference for one or the other, and someone may be beating their rate, maybe you try to get them to see if they can make an adjustment to their pricing or do something to try to work with that particular one who you're going to click with the best. When you're getting pre-approved with multiple lenders, we're all going to ask for basically the same documents, if not the exact same documents. So it's not like you have to gather up different sets of documents for different lenders. So it's not that big of a deal from your standpoint either. And I recommend this to my clients all the time. I think that it's a huge deal, especially when you're buying a home, that you want to make sure that you're working with someone you trust and someone that's going to give you good pricing. So you do your due diligence, and if you know you're going to talk with a few lenders, get everything to them up front so that you can get an accurate price quote when you have an offer accepted and get the loan process right away, because it will add a little bit of stress even if you find someone that you after your offer is accepted that you weren't pre-approved with initially. Well, now they've got to do the whole application with you, so that adds some time when you've got a lot of other stuff you're doing, like signing documents for the real estate agent, getting an inspection scheduled, getting an appraisal ordered. There's a whole bunch of stuff that happens. So do this work up front. That's my suggestion. Once your offer is accepted, that's when you can request a loan estimate from the lenders that you're working with, because you have a home that you're getting a loan on. We have an address we can put in. Then you can compare the box 1 under the loan terms section, not labeled box 1, but it's the first box. I'm going to show you this in a second. And then you can compare the costs, and box A is the most important, and sometimes box B on page 2. And it's very important to not compare third-party fees and estimates because those are just that. They're estimates, and lenders can put whatever they want on there. On some of them. So there's tolerances. It's very complicated, so I won't go into detail on it. But some of the bigger priced items, such as estimating your property tax, homeowners insurance, title costs, there's a lot of leniency on what the lender can put and artificially make your costs look lower than they are. So let's show this. So I have a couple loan estimates that I created for this presentation. These are not offers of financing. They're not based on actual rates right now. They're just rates that I kind of picked out of the air. There's a lot of regulation in the mortgage industry, and I have to make sure that neither one of these are actual interest rate and terms that I'm offering for clients with this scenario right now. They are just for the purpose of this video and are very much favored. So first, just kind of show you what is on the loan estimate. First page is pretty straightforward. It's going to give you the terms of the loan, 30-year, purpose, purchase, is it fixed or is it adjustable rate, the type of loan. This is really important. Is the rate locked? Yes or no? Now, when you're comparing pricing, you're not locking the interest rate in. So it makes sense that it's not locked. But it will be important later when I talk to you a little bit about what some shadier lenders might do. and how to kind of protect yourself. So then it's just loan terms. What's the interest rate? What's the loan amount? What's that monthly payment? This is the principal and interest, or sorry, no, this is the principal and interest. This is the taxes and homeowners insurance per month. Now this, a lot of people get hung up on the closing costs, which makes complete sense. Not being in the industry, I would too. You go, okay, let me just compare what's the interest rate and then who's giving me the lowest interest rate and who's giving me the lowest closing costs. Well, the closing costs are mostly those third-party costs. They're a combination of your escrow setup for taxes and homeowners insurance, and we can estimate whatever we want for taxes and homeowners insurance. So we can make this look a lot lower. So I will show you. So this is the same scenario, different loan. And on this one, we estimated $360 for the taxes and homeowners insurance. So that is going to make the total payment here much lower. Now, this is a lower interest rate too, because this is an example of a lender that's being probably not very truthful. But so the interest rate's lower, so that's lowering the principal and interest, but this is also lowering the payment. So now we have $22.56 versus $18.88. So quite a bit lower because this is about $300 lower, $270 lower. And then that's going to affect this number quite a bit because in Michigan, in Southeast Michigan, between your property tax, setup, excuse me, the property taxes we're putting into your escrow account, plus your tax prorations due back to the seller, is about a year's worth of taxes plus a little bit extra for reserves. So about this time, and then homeowners insurance, you pay for a year up front plus a little bit of reserves. So it's basically this number times 12. So if this number is double, I mean, that's going to lower the out of pocket by a good 2,500, 3,000 right there. Which equates for the difference in this closing costs. So what you do want to look at is box A. It's probably the most important thing when comparing lender to lender. It's going to show you if you're paying any points for the interest rate, and it's going to show you all the other costs that are in-house for the lender. So things like processing fee, underwriting fee, origination fee. So just a brief definition of points, if you're not sure what those are. You can buy down your interest rate. When you do that, you pay points. So you're paying money to get a lower interest rate. They go as a percentage of the loan amount. So 1 point is 1% of the loan amount. So if this client was paying 1% for the interest rate, their loan amount is $320,000. They'd pay $3,200, and it would appear right here. So if there's no points there, you're not paying anything for the rate. What a lot of lenders will do, just to make things a little bit trickier, even if you are, reviewing the loan estimate, is instead of having points, they might have 0 points, but they might have a very large origination fee. So if they're charging you $3,000 for the origination fee plus processing, the 0 points, well, they're really charging you a point. They're just calling it origination fee instead of points. So you're really just adding all of this up. Now, there are sometimes costs that would normally be in-house that appear in services you cannot shop for. Processing is the biggest one, possibly underwriting, possibly like a doc preparation fee from a third party. But these are in-house costs. These are third-party costs, but they're costs the lender's ordering that they're requiring. So like the appraisal credit report, flood cert, electronic notice, MERS registration fee, tax service. I'm actually a broker and I use a third-party processing fee. So my processing fee actually ends up down here. So it's important to look there to see if there's any other fees that, and kind of just really, most of these fees are going to be very similar from lender to lender within a couple $100. So adding these together is probably okay most of the time. So once you know what you're being charged for the rate compared to other lenders and stuff, that's where you're going to kind of make your decision. Everyone's probably going to be pretty similar. You're just seeing who's a little better, who's a little bit worse. What will happen sometimes, though, if you talk to enough lenders, you will find a shady one. And usually they're going to be the one that's the outlier of the other lenders. So what happens from my end is I will have a client that will call me and say, hey, Andrew, talk to a few lenders. Everyone's about the same, except this XYZ company is way lower than you. They're giving me 0.5% better on the interest rate and the closing costs are lower. I just have to go with them. I mean, they're giving me such a good rate. I wish I could go with you, but if you can't match it, I've got to go with them. And what I say is, okay, here's what you need to do. That does sound like a phenomenal rate. Obviously, I wish I was doing your loan, but more importantly, I want you to be protected. So call that lender right now. Lock that interest rate in and send you a locked loan estimate. I'm going to see right here. This says yes. Once that says yes, they cannot change this. And if charging a third-party origination, origination would always get, if they're charging third-party underwriting or third-party processing or some other third-party cost, if there's going to be a tolerance on it here, that's pretty low. So it has to be pretty accurate here as well. So once they lock it, you're good. Here's what usually happens. That unicorn rate that they got, that unicorn rate in term, isn't real. The lender is purposely giving them the false information to try to get their loan in process and then not lock it. And then later just tell them, hey, we're further along in process. Now we're going to lock your rate. It went way up. Sorry. And at that point, you can't really back out because you've already ordered an appraisal. You've got a contract that you need to hit. So there's a lot of reasons that, you can't really back out from that lender without causing a lot of chaos in your loan process and being able to buy the house. So what usually happens when I tell the client, go to that lender, tell them to lock it in, 9 times out of 10, they come back and they say, oh, they said they're not going to lock it because they actually think interest rates are going to drop in the next few days. Or they'll say, well, they've got this process where they can't lock it today because it's got to go through their setup team and their process team. So it'll be a couple days, but it's going to be, they said it'd be very similar and we'll lock it the next few days. Those are all huge red flags. And I would recommend you running, not walking away from that lender because they're almost certainly doing something shady. There's no lenders that I know of that can't lock your interest rate in the same day, provide you a locked loan estimate. The only real reason that they would do that is to try to be shady, or unless they think that they're a rate guru. But I can tell you right now that us loan officers are not rate gurus. But it's rare that I will tell clients not to lock their interest rate in based on market because I don't know what it's going to do any more than anybody else does. And really, even the so-called experts don't really know what it's going to do. So that's the biggest red flag, is if you're getting a way better rate, way better terms than others, and the lender doesn't want to lock it in and provide you a locked loan estimate. Those are the ones to avoid. Most lenders are honest, or fairly honest. The others, it's just kind of picking who can give you the best deal. You can do things at that point too, is if you can go, hey, this lender gave me a little bit better rate. Go to the other lender and say, hey, can you match it? That's oftentimes things that can happen. I have clients that have, when I wasn't the lowest, I've done that for on a case-by-case basis. So at that point, you can shop between them a little bit and just let them know what you're getting offered. You ask for the pricing from each one so you can send it to the other ones. Oftentimes they have to have a manager or somebody sign off on it if they're going to match it. And then it is true that you're purchasing a home and you probably have a tight window on your contract date. So you do want to get the one in process with somebody pretty quick. So you do want to lock it in and get it rolling. One other thing I'm going to show you, and then I will wrap this up, is this. I'll put this website in the video notes. So the CFPB is governing body for the loan estimate, and they have a nice little explainer that shows you line by line what every section is. You can click right on it. It shows all 3 pages. So a little bit helpful because I know I didn't touch on every single fee and every single section. So if you want to get a little more in depth, this can help. I'm going to also include if anyone in Michigan is in the market for purchasing a home and needs to throw my hat in the ring. Like I mentioned, it doesn't hurt you as at the pre-approval stage. If you have multiple lenders pull it, I would be happy to get you pre-approved and be able to compare apples to apples when it comes time to get your loan in process and help in any way I can. So I will put my contact information in the show notes. If you liked the video, please subscribe and hit the like button. I'm going to be producing more videos such as these that hopefully will help you as you're searching for a home, mortgage related. And thank you so much for watching. Really appreciate it.